Welcome back to our show where we're covering some of the big banking earnings that have come out. We spoke about ICICI Bank and Kotak Mahindra Bank. RBL Bank also came out with a strong set of numbers for the second quarter. It saw its profits rising 46% on an annual basis, with asset quality also showing some improvement. Abhishek is back with us to take us through the highlight of RBL Bank's numbers. Abhishek, what were the highlights, and if you could take us through that reclassification that the management has done and how that impacted the numbers?
The reclassification is a one-off and not comparable. So, let's leave that to what the management has done. Now, RBL Bank has done a strong quarter. On a like-to-like basis, the net interest margin has actually improved to 4.89% when compared to 4.84% in the previous quarter and about 4.5% in the same quarter last year. Now, take this number very nicely given the fact that the deposit growth has been higher than that of the loan growth. So, with the deposit growth coming in at a price, they are able to improve their net interest margin on a sequential basis. You're not seeing that for the likes of Kotak Bank or even ICICI Bank or Yes Bank, who have given results today. With one-off change, the net interest margin is at 5.54%. Now, another good part is that their operating efficiency has improved, although it remains elevated. Cost-to-income ratio is at 6-quarter low, and slippages at 541 crore with an annualized slippage ratio of 2.84%. This is one of the lowest annualized slippage ratio that I am seeing for RBL Bank in last 12 quarters, or let's say 3 years. Asset quality, they continue to improve. X of Q3 FY21, which was a dispensation quarter from the RBI, gross NPA ratio is at 16-quarter low, net NPA ratio is at 16-quarter low. Gross NPA ratio has come in at 3.12% and net NPA about 0.78%. Now, return ratios, they are one of the best that you are seeing in last 15-16 quarters. ROA at 1%, ROE of about 8.39%. RWA to advances ratio is at 14-quarter low, which means that the balance sheet is becoming less riskier, and there is growth coming in from secured portfolio or lower risk portfolio. So RWA to advances remains on the higher side in the industry, but it's on a declining trend. It's now at 117.2%. CASA ratio on the flip side is one of the lowest that you are seeing in last 6 quarters, coming in at 35.7% when compared to 36.6% in the previous quarter. But that's a trend that you are seeing across industry. People like you, me, common man, everyone is actually moving their money from low-cost deposit, that is saving account, to term deposit for better rate, and that is hurting all the banks. P&L, both, they have actually made changes, so I cannot compare a like-to-like basis with my poll. However, NII is at 1,475 crore. We are working with a number of 1,285 crore. Their PAT is at 294 crore, and that's a comparable number with our poll of 267 crore. So a PAT is a beat on our poll. Back to you.
Well, that's as far as RBL Bank